What's good, guys? Welcome back to the channel. Now guys, we're closing in on a phenomenal month, right? So check it out with me. Today, sold out of an option play that I shared with the team over the Discord for a $3,000 gain. The guys have made thousands on this move, and I want you guys to make this type of money, all right? So make sure you're joining us. The link is in the description below. Tap in and we'll see you guys over there. Now guys, given the fact that we're seeing major sell-offs in these markets across the board, we now got the heavy artillery coming in to spend some cash. Like a couple of weeks ago, we saw Charlie Munger go ahead and announce that he doubled his position in Alibaba. And then in the last 24 hours, we've seen another billionaire, that's Bill Ackman, announce his position in Netflix. Now, if you don't know Bill Ackman, he actually bet 27 million that the stock market would crash back in 2020. And he was absolutely right. And he made like over 2 billion in that move. Now, he's not always correct. He's not perfect. A couple of years back, he bet that Herbalife would sink and he lost 1 billion in doing so, right? But given the fact that he's now a top 20 shareholder in Netflix, picked up over 3 million shares with a position of over 1 billion, all right, it's made the headlines and we've seen a jump in that stock price. As a matter of fact, the guy has made 100 million just from that move, and given the fact that we've seen the pop in that stock price of 7-8% today. Okay, so I want to talk to you guys about the move, and is it the best dip buy stock to go ahead and pick up? Is it the stock that you guys should be throwing the cash on right now? Now, a couple of weeks back, I did a video breaking down all the FANG stocks of you guys. I told you the ones I was most concerned about was Netflix and Amazon. Okay, told you guys Netflix was just trading with some sky high valuation, price to perfection. And if they slip on any type of metric, you're going to see that stock price fall. And that's exactly what we've seen. All right, we've seen them come out and just warn the markets that the subscriber growth is slowing down. The extent of that is large, guys, because they're expecting just over 2 million new subscribers in the first quarter this year. Analysts are expecting like over 4 million, all right? So it's almost half the amount of growth that analysts were expecting. So massive slowdown in the business. Now, this is a company that's dominated the streaming space over the last decade, but since then had other competitors come into the scene, like a Disney, for example, just stealing market share, stealing some of the limelight from Netflix. So we're seeing the business now having to adapt to the current situation, and they're just not growing as fast. So to answer the question of, is this the best dip buy stock? Is this where we should be spending our money? I want to look at it from two different perspectives, right? The first is, has the stock bottomed out? Has it hit its low? And then what can the company do? What can management do to actually drive this to be a $400 stock, $500, $600, etc., etc. Okay, so in terms of has the stock bottomed out, if we just look at the overall market, we're looking at the technicals. QQQ 300-day moving average is struggling to close above that mark. That's not a good sign, all right? Because everyone in the market knows now that the QQQ is struggling to close above a significant level, and that could cause some further volatility. So I'm expecting some more downside pressure in these markets, just dragging Netflix along with it, right? So when we know we've seen it move up, but we can easily see that stock move back down. Now, Bill bought in at 350. He pretty much put in the low, given that buy and given what it did to, you know, the media outlet coverage and the marketplace liking that move and seeing it as a potential low in the Netflix stock. Okay, so he's put the low in, but we could easily see profit taking, people taking icing off the cake, and we can see that stock coming right back down to the levels that he's bought it in at. And that's exactly what I do expect. I don't think that's the lowest. I don't think 350 is the lowest we're going to see for 2022, because as they roll out their earnings, guys, I don't think their earnings are going to be great. We are going to start seeing those slowing numbers, even though a lot of that is priced in. You guys know these markets can be ruthless. Okay, so I'm expecting a lower level than what he's actually bought in at. Now, what can management do to actually drive this business? Well, they're doing things like increasing the subscription cost for like the US and Canada audience and subscriber base. That's something you can only do a couple of times. That's not a sustainable long-term growth strategy. Another thing they're trying to do is really grow their subscribers now in Asia, because it might be that they've hit peak growth levels. They've got almost as much market share as they can within the US market. Okay, they're still going to grow in that space, but it's going to be a lot slower than they were doing historically. So they're looking further overseas. Now that's a hard thing to do for any company, just expand internationally. And when I see a company that is struggling to grow their business in their home turf, that's a cause for concern for me personally, right? I like those businesses that just can continue to dominate on their home turf, and there's no problem there. They got that extended runway of just continual momentum, continual subscriber growth, etc., etc. The next, guys, and this is where I do see the value in Netflix, is moving into different tangents, like the gaming side of things, which they are doing. All right, this is something that can add a lot of value to the company if done right, and they're starting to make headwinds there, they're starting to make inroads there, and actually actually get into different adjacencies, and that's where I think they're going to drive a lot of their growth. Now that's going to take time. That's going to take time for that to really be fulfilled, and it's going to take money as well, investment as well. So one of the things that Bill did say, guys, is he was saying that one of the reasons why they've been able to make such great returns is the fact that they have a long time horizon. And that's exactly true, guys. If you invest into something quality and you give it enough time to actually play out, the very high likelihood is it will play out. It will just take some time. And that's exactly what I think is going to happen to the Netflix story. It's going to take some time. But in the meantime, I think there's going to be tons of volatility, and I think you're going to be able to get it at a cheaper price point. Now, I know I sound like a massive Netflix bear. I'm not a massive Netflix bear. I just don't think it's the right level to go ahead and buy, in my opinion. Now, I have a rule. Whenever I see any of these analysts coming out and giving a price target increase and that stock moves off the back of that, or someone of significance buying in and then that moves, I think these are weak catalysts, and 99% of the time you see that stock price come right back down to the level that they were when they made that announcement. Okay, so that's my expectation for the stocks. I want to talk to you guys about that one because I see this one moving just against the grain of the market right now. So I just want to give you guys a little bit of a heads up and some perspective, some alternative views. All right, so that's what I've got for you in this one. Catch you guys in the next one.